For nearly a century, the US dollar has been king. But what if that's all about to change? We're going to break down 3 possible futures for the dollar, and maybe more importantly, what it means for a rising power like India.
So what if I told you the world is, well, quietly preparing for a future where the US dollar isn't the center of gravity anymore? And look, this isn't some far-off theory. For the first time in 80 years, countries are genuinely acting like the dollar won't always be king.
And the signs? They're pretty much everywhere if you know where to look. You've got oil deals being signed in currencies that aren't the dollar, central banks are hoarding gold like there's no tomorrow, and brand new financial networks like BRICS Pay are being built from the ground up to create a real alternative. Make no mistake, a fundamental shift is happening right now.
This is Voice on Pages, where economics meets reality. And this shift, this massive reordering of financial power, well, this is what's going to decide whether India rises on the world stage or gets squeezed by forces completely beyond its control.
Okay, so why should you care about any of this? Simple. Because a shift in the dollar's power hits you right in the wallet. It's going to impact global trade, inflation, interest rates, even the price you pay for fuel and your groceries. But here's the real twist most people miss. This change doesn't hit every country the same way. Some are going to win big, and some are going to get hit really hard.
So, to really get a handle on the future, we need to break down the 3 big scenarios that economists are arguing about right now. But first, let's set the stage, because this isn't about some sudden dramatic collapse. Now, this is about a slow, steady, and pretty undeniable erosion of the dollar's foundation.
All right, let's talk numbers for a second. The dollar's dominance in global currency reserves, it's been shrinking. We're talking a drop from 71% back in 2000 to around 56% today, and that's straight from IMF data. It's this quiet but really steady shift, you know? Central banks are diversifying their holdings into things like gold and other currencies.
And what's really fascinating here is that we've seen this movie before. I mean, every single reserve currency in history follows the same basic arc. You had the Dutch guilder, right? It dominated for over a century, but then imperial overextension and a mountain of debt brought it all down. Then you had the British pound. It made up 80% of reserves right after World War II, but by the 1970s it was under 10%. The takeaway? These transitions are long, multi-decade processes.
So when you look back at history, you start to see a pattern. There are basically 5 critical warning signs that tell you a reserve currency is in trouble. First up, national debt gets over 120% of GDP. Second, you see military and imperial overextension. Third, people start losing trust in the central bank's independence. Fourth, its share of the global economy starts to shrink. And finally, number 5, you see the rise of these parallel networks, alternative systems for trade and payments.
Okay, so how does the US stack up against that checklist? Let's take a look at the report card. Debt to GDP, already at 124%, so check, that threshold's been crossed. The independence of the Federal Reserve? Yeah, that's being questioned more and more. And those alternative payment networks, like China's SIPs or the new BRICS Pay system, they're definitely gaining traction. The big takeaway here is that, yeah, multiple warning lights are flashing.
All of this leads to a huge debate about what happens next. Which actually brings me to a quick question for you. What's your take? Do you think the dollar will stay dominant, or are we really heading towards a multi-currency world? Drop your view in the comments. I've got to say, the discussions on this topic are always fascinating to read.
Okay, time for the deep dive. Economists basically see 3 major paths forward. The one they think is most likely, we're talking a 60% probability, is what's called the slow fade. Now, in this future, the dollar is still king, but its throne is, let's say, a lot more wobbly.
So what does that look like? Well, the dollar's share of global reserves just keeps drifting down, maybe towards the 50% mark. Central banks keep stacking up gold. More and more trade deals happen completely outside the dollar-based SWIFT system. And all the while, that growing US debt means interest payments could hit a staggering $1.2 trillion a year by 2035.
So what's the fallout? Well, for a country like India, this is actually a huge win. It gives them more bargaining power in trade deals and makes it cheaper to diversify their reserves. But for the US, it means higher borrowing costs, inflation that just kind of sticks around, and a slow, steady decline in its global purchasing power. The key here is that America doesn't collapse. It just becomes one strong currency among several, not the currency.
All right, on to scenario number 2. This one has about a 30% probability, and it's called the shock break.
This is where some major geopolitical event happens, and bam, a parallel currency world is created, shattering the dollar's dominance almost overnight.
So what could possibly trigger something like that? Well, imagine a major oil player like Saudi Arabia suddenly decides to price all its oil in Chinese yuan. Or maybe a huge backlash against US sanctions pushes a ton of countries to adopt something like BRICS Pay all at once. In a world like that, China's new digital currency could end up handling, say, 20% of all global trade by 2035, creating a massive system that just goes around the dollar.
Now, in this scenario, again, the dollar doesn't collapse, it just loses its exclusivity. For India, that would mean some serious short-term pain and volatility, but probably long-term strength as the world becomes truly multipolar. For the US, though, a sharp spike in interest rates, much weaker import power, and, get this, a 40 to 50% drop in how effective its economic sanctions are. But the most dangerous scenario of all might not be geopolitical. It could be internal.
And that brings us to our third and, frankly, most extreme scenario. It's a long shot, maybe a 10% probability, but it's called the hard correction. The scary thing here is that it's not driven by outside forces. It's triggered by an internal US debt crisis that forces a sudden and very painful reset. So the trigger here is simple. The US debt path just becomes obviously unsustainable. The interest costs get so high that you start seeing failed treasury auctions. That's when the government literally can't borrow enough money to pay its bills. That could spark a massive panic, causing foreign countries to dump their $7.4 trillion in US assets. And that creates a death spiral for the dollar.
And the impact here would just be catastrophic. For the US, you'd be looking at a 30 to 50% drop in the dollar's value. Interest rates would spike to 10, maybe 12%, kicking off a deep recession. And core inflation could hit 20%. For India, it's a huge, high-risk gamble. Their export markets in the West would completely crash, but on the flip side, the value of their gold reserves would absolutely surge, providing a much-needed buffer.
So, when you lay out these three potential futures, you can see that India finds itself at a massive strategic crossroads. The choices it makes over the next decade will pretty much determine whether it comes out of this as a major winner or a loser in this new global order.
So what's the playbook for India? Well, the research points to a clear, four-part strategy. Number 1, ramp up trade settled in its own currency, the rupee, to about 15%. Number 2, build up a war chest of over $100 billion in Chinese yuan, specifically to pay for oil from Russia and the Gulf. 3, triple its gold reserves to around 2,500 tons as an ultimate safety net. And finally, number 4, play a careful balancing act. Keep the security partnership with the US strong, while at the same time deepen economic ties with the BRICS nations.
Okay, so let's do a quick recap. The big picture is this. The dollar isn't collapsing tomorrow, but the rest of the world is actively and rapidly building alternatives. The three paths we walk through, the slow fade, the shock break, and the hard correction, every single one of them fundamentally reorders global power. And for a rising nation like India, it seems like the only real strategy is one of multi-alignment.
Hey, if you want more geopolitical breakdowns just like this one, make sure you subscribe. And if you want to support what we do here at Voice on Pages, there's a Buy Me a Coffee link down in the description. We'd really appreciate it.
So I'll leave you with one final question to chew on. Which of those three scenarios, the slow fade, the shock break, or the hard correction, which one do you think is the most likely future? I would genuinely love to hear your take down in the comments.